Yes, friends. So we'll move on. See, we have already covered by now the security deposit, how to account like a ZCB. The staff loan will be generally in the form of a conventional bond. Group transaction generally will be like a ZCB. Okay, so we have seen how to account all these transactions. Now we will take one more case. I told you there is only one question on the L1 input that we will discuss. So take out question number 11. This is an examination question which appeared in the second, like November 2018 attempt. NAV Limited granted a loan of 120 lakhs to Old Limited for a 5-year at a 10%. What type of loan it is? What type of loan it is? It is a conventional. 10% is their life. See, when they give you coupon rate and the year, it's called a conventional. The moment you say conventional, one picture should come to your mind. There is a principal and interest. And you can use an annuity factor. Followed, no? But you need to do one small working note, make a practice, add all these things and get one annuity factor. Straight away, don't add in the calculator and write there. Simply create one small working note. Because I don't know, I have seen that you should doing somewhere, one place. Now, okay, which is a treasury bond? It's a bond with the yield of equivalent maturity. Bond yield of equivalent maturity. But the incremental borrowing rate of Old Limited is 12%. In this case, the loan is granted to Old Limited at the below market rate of interest. Okay, for some or the other reason, they gave the loan at the less than the market rate. So now you understood this is off market. Otherwise, transaction price would have become my fair value. Since it is an off market, this cannot become the fair value. What we need to do, we have to compute the fair value. And to compute, we need the present value of the future cash flow, and this is a conventional bond. See, these are all analysis is going to happen in your mind the moment you read this question. And that is clarity over thinking. That comes to you only with the practice. India's 109 requires that the financial asset or liability is to be measured at a fair value. Should they tell me in the exam? We know that, no. It should be measured a financial asset or liability, but we are not sure in whose books they are asking. Be careful. Because already we have seen in one group, study material they asked in the head books of parent. One examination question also came in the books of parent. Suddenly another examination question in the books of subsidiary. Should the transaction price be treated as a fair value? Should it be treated as a fair value? No. That's the answer. That's the clarity. Now, will you say no in the examination? You have to explain, see, understood, no? See how they ask you the question. This is an examination question. You have to explain why. Answer is no, you understand it. But how do you communicate? What you will tell? It's an off-market instrument. That's the reason we treat it not to be the transaction price is not equal to its fair value. Now, what is the find out the fair value? Now, what is the verb used here? Find out the fair value means. Find out the fair value means what? Calculate. No, again, explanation, headache not there. What is the accounting treatment of the difference between the transaction price and the fair value on initial recognition? That means, see, the moment you say no, there will be transaction price minus fair value, there will be some difference. There will be some difference. So, what you are going to do with the difference? That's what they are asking. Is it a theory question or a practical question? How many questions are sitting in this question? In this one question, how many questions are sitting? 3 questions are sitting. Out of 3 questions, how many are theoretical, how many is practical? Only 1 is practical, 2 theoretical questions. Followed, no? See, this you need to figure out. And then you tell me, will you touch this in the examination? How many marks? Makes sense to you? Okay, your effort versus the reward what you are going to get. Does it make sense? Okay, how much effort is involved? See, we have seen one 4-mark question for which from the top to bottom you have to write the journal entry. It is like somebody will ask you to put 1 day effort. Okay, say work for me for 1 month. I'll give you 100 rupees. What you will say? So get lost. You pay me 10,000, I will work for you. But 100 rupees, I'm not going to work for one month for you. I may work for 1 hour if you want. See, examination marks are like rewards for your efforts. You give good output, you get good reward, correct? No? Is anybody going to stop that? No. But when somebody is offering you, who is offering, who is the seller here? Institute is the seller. They are giving you a question and say, solve this, I'll give you 5 marks. Just look into the effort versus the reward what you are going to have. This is good. There is no catch. Sometimes what happens, no, we touch some problem, some solve, okay, we get into doing reconciliation and all in client level. After touching, we understood it is too much deep work. So that's why the expertise is something. Before you touch the work, you understand, should I do this or should I not do this? If you can't do it in the examination, I'm asking only one question to you. How do you do it after examination in your real life? Somebody will call you when you set up your practice. They say, sir, one bank loan I have to apply. Can you do this? First, they will ask you, how much you charge me? So without understanding scope, if you quote, I'll charge you 1,000 rupees. Contract got signed, finalized. And after you understood to give that draft, that bank statement, 10,000 rupees worth of effort is involved. Lost, no, Baba. So should you not develop that judgment in the examination question? That's why, and I'm telling you, other questions don't bother, other subjects. FR, AFM, audit and all, you don't bother. But FR, your biggest problem is the question, what they ask, no, theory is sitting. I told you, 5-mark question, they will ask you for 15 marks. 15-mark question, they will ask you for 5 marks. Followed? Yes. So, yeah, if I was there, I would have definitely done this question because it will easily give me marks. So, what should I do first? Okay, and you tell me, no, let us discuss, okay, because anyhow, this question you only have to do. Let us discuss. You told me this, How would you treat the difference? Tell me. Discount? Will you say it is a discount on loan? Okay, chalo. Nomenclature. Purandarasa only told. What is there in the name? You call it discount, you call it another thing. I don't bother. What you will do to that head? You call it by any name. Chalo. Somebody will call prepaid, somebody will call this thing. Doesn't matter what you are going to do with that. See, the accounting entry will be what? What is my accounting entry? In whose books? Asset. So my accounting entry will be bond account debit, whatever, investment or whatever financial asset, to bank. Difference will be definitely here. I call it difference account. You call it discount account. Somebody will call another name. Now my question to you, what you will do with this? This is conceptual. On what basis? Sorry? Sorry, no. Yeah, you are going to classify it as amortized cost. I agree with you. But what you are going to see, amortization and all comes subsequently. When did you incur this? When you are passing this entry? On day one? No. On day one, what you will do? Will you keep in difference account only? Now you can keep. How long you will keep? Year end will come. What you will do at the year end? Proportionate. Why? On what basis you are telling? Baba, see, in all these problems what we saw, there was one underlying base. Either it was a security deposit for a lease, either it is an employee given loan given, either it is a parent given to subsidiary. Here tell me, who is NAV, who is old here? Who is NAV, who is old? What is the relationship? Why they give off market? I don't know. Have they told you? Yeah, that's fine. Who is old subsidiary of NAV? And then on what basis you decide? See, if you make any judgment, you should give a very clear-cut assumption there. Because question is very silent between the relationship. You tell me, no, I am treated as investment. On what basis? Right, no, if it is assumed that old is a subsidiary of NAV, we are going to put that difference in affluence. Okay? So here the solution is, we have to write that we are not clear. So then we'll write the theoretical part and we assume that the difference is because of the L1, because we don't know the relationship. No, it's observable. I don't know whether I'm going to get any benefit in the future or not. So I'm going to charge it to P&L account right now. I told you, there is only one question, and that question only came in the examination. Please keep in mind. Yeah. No, you want to take that stand, no, sir. Then assume no, that old must be this thing, old must be giving some benefits in the future. Otherwise, why on earth somebody will give you off-market loan? Followed, no? Then you give that assumption. Assuming old limited is going to give benefits in the future, we are going to amortize, and equally over a 5 years period, we are going to distribute. Okay, so right solution. One more catch is there, which is comparable loan. Somewhere something they told. Okay, which is comparable loan here? NAV Limited granted loan of 120 lakhs to Old Limited for 5 years with 10% on them, which is the treasury bond yield of equivalent maturity. But the incremental borrowing rate of Old is 12%. Now 10% is your coupon rate. Okay, your discount rate is 12%. Okay, you don't have any confusion there, no? Yes, somebody would have taken this discount rate only. But they say that, look, see here one more catch. If somebody would have got confused in the examination, you gave a loan. This loan you should compare with what? Market. What is market? His incremental borrowing rate is market, or its comparable loan is a market. You have to always compare with the equivalent maturity. No. See, point is something you have to understand the question like this. See, Old got a loan from this guy at 10%. If NAV would have told, no, I will not give loan to Old, what Old would have done? He would have gone to the bank. How much bank would have charged? 12%. Understood? Now, if NAV is going to, Old is going to evaluate, for Old, the comparable loan, the benchmark is 12%. Because if you don't give me, I have to go there. For me, your loan and his loan, I will try to compare. Okay. If NAV doesn't want to give loan to Old, what NAV can do? Deposit where? Which bank? Have they told you? They said you can deposit in treasury. What is treasury bond? What is government bonds? So what is your option now? Your option is, if you can't give loan to him, you would have invested there. Now, which is your, now from whose perspective you are discounting here? NAV Limited. For NAV, which discount rate we should take? Should we take 12% or should we take this treasury bond yield? We should have taken, but see, BT, they have not given me. What if in the examination they would have said treasury bond yield is 11% and incremental borrowing rate is 12%? And this they would not have given you. Possible. Let us think of possibility. See, procedurally you will solve it, Baba. Now you have understood. If I say please pause the video, do it, you will do it. But my objective to discuss is all the possibilities what they may give you. If at all, worst case scenario, if they would have given you like this, treasury bond equivalent yield is 11%, incremental rate is 12%, tell me, from the NAV perspective, which discount rate you are going to use? Now I should take 11%, no, because that is comparable to him. Followed, no? Yes, yeah. There is, with the grace of God, they did not give it. In fact, the present value factor is also given. Somebody need not go to that depth. Straight away solve the problem in the examination. Okay. So first write solution. Since loan is off market, which they have given in the question only, transaction price will not be equal to fair value. Okay, I'll write in one single short sentence, okay, like this. But in examination, you may have to write a proper sentence. Anyhow, that proper sentence is available here. When you revise, refer this. You keep it as a base, like it is very handy to you. In your mobile, you can watch this PDF easily and you can try to solve it. It is in the same sequence. So transaction price cannot be fair value. Second thing, they asked you calculation of fair value. So generally we can follow this format. Year 1, year 1 to 5. Oh, sorry, year 5, or you can say year 1 to 5, because this is the format you follow in AFM. Year 1 to 5 and year 5. No confusion. What is your cash flow? Year 1 to 5, what you are going to get? How much? On 120, 12. And on the 5th year, what you are going to get? 120, no premium. Your present value annuity factor will be 3.604, which you are just going to add it. You can create it as a separate working note depending upon your time. See, this is a small question. That's why you need not give that much of importance to a working note. But if it is a 14-mark question and all, followed, no? Then, I don't know, maybe 1 mark they might have allotted for this working note here. So, create one working note for this. And what did they ask you? Find out. Find out is a small verb like calculate. That many working note importance not given. But if they say compute the fair value, then you have to have one working note for this 3.06. Simply you cannot say 3.604 from where it came. So verb was not that much useful here. So we straight away did this. And second 0.567. So PVCF will be, write the total here, 111.288. So right at the bottom, difference will be is equal to because this is a fair value. Followed, no? Yeah, difference will be 120 minus 111.288 is equal to 8.712. See, I am going to change this presentation, okay? Because what they asked you fair value. So your final answer should be equal to fair value. But what I have done here in the presentation, I have minus transaction price minus fair value. So I have shown the difference. No, I am going to change it. You have understood, no? So in our question, first we are going to calculate the fair value because that's what they asked. Then they say analyze the difference. That's why we calculate difference at the bottom. Okay, right now, how do you treat this difference? Treatment of difference. So you have got a difference. Since fair value is assumed to be based on L1 input, that means very much observable. For some reason or the other reason, stress was there, blackmailing they might have done. I don't know, God knows. Possible, no? Old might have blackmailed. I will file a complaint against you because your product was defective. If you don't want the complaint, give me loan of 120 lakhs now. See, this is an observable now. Now it's gone for me. So it is then based on the L1 observable input, or I can also say that alternatively, look, it's very much observable. You would have got a loan there at 12%. I am giving you a 10%. Comparison is very much readily available for me. That means I am lost it. Actually, I was not supposed to give you. I could have invested there. I have lost it. See, it's an assumption. Followed, no? So L1 input, it will be recognized in P&L. See, what is the mark allocation? 1 mark for the first one, 2 marks for your calculation, 1 mark for the treatment. Finish. See, while writing, you know that you got the 4 marks, 4 out of 4. Good number, no? 4. First boundary, starting only. Good opening, right? Then batsman will get a confidence. Then 6 will come, 4 will come, 1 run, 2 run here, there. Half century will happen after within 1.5 hours. And then when long innings is going to happen. And this strategy should be repeated. I will repeat 100 times now. I want to have this strategy in your mind. We have Tulu language, no? We have got one saying, Muchara Ponda, Chuchara Ponda. Means, if you touch something, no, it's going to bite you. Such type of problems don't touch. First 1.5 hours. You are confident, touch. Yes. So next we will move to RTP. Okay, you asked me that day one question about this debtors related. Go through this question. This is an RTP question of May 23. In an arm's length transaction, entity X, that means fair value, in an arm's length only here, entity X buys 10,000 convertible preference shares of company Z for cash payment of 40,000. So 25,000 is payable immediately and 15,000 payable end of in 2 years time. So right now I have invested in the preference shares. The market rate of annual interest rate for a 2-year loan would be 6%. Explain the accounting treatment of the said transaction. What did you understood with this? And what did they ask you? They asked you to pass the entries here. No, it's a theoretical question actually. But theory includes calculations. You can't simply explain it unless, because there are numbers available. I told you there are 4 categories. One is pure theory, 5 to 10 marks they may ask you, which I have separated. One is pure practical. Second is majority theory, little practical like this. Something is majority practical, small theory like previous question. Now tell me, what is your understanding about this? What did you understand? It's the arm's length transaction at market terms. Okay, chalo, we'll take at market terms. How should I account it? Explain the accounting treatment. How should I account? What are you going to say? So, sorry? No, what is convertible? You can convert into equity shares. How many? Okay, may not be relevant. Now, what is the convertible preference has got any role to play here? Should I focus on that particular word? Okay, explain the treatment in whose books? I don't know. In whose books it sounds like? See, questions will come like this. That's why they said give assumptions. Now, whose books you will like to treat? And one more thing, I'll tell you. This is which question? Exam question or RTP MTP question? I'm telling you right now, I don't know whether I told you or not. Trust only 5%. In examination, same question will come with better clarity. They say, explain the accounting treatment in the books of, which makes sense to you now? X Limited. Why? Because we are discussing financial assets. No? So in the solution, they have solved it from the X Limited perspective. No, where rate of annual interest rate for a loan, 2-year loan to the entity would be 6%. Yeah, that means it's their incremental borrowing rate. Their borrowing rate is 6%. Then it is in market terms or at off market terms? See, they use one beautiful language called English and put some unnecessary words called unnecessary words to confuse you. They make your mind stuck to this. Oh, arm's length. Maybe in the examination they may remove that word. I'm telling you, don't give importance to arm's length also. Then tell me, is it at market terms or at off market terms? Not market terms. Why? Because see, whenever, okay, you just go to MRPL, you buy their preference shares. What they will tell? Pay me right now. I want money right now. No. But this guy is paying 25 right now and 15,000 after 2 years. First of all, is it a financial asset? I don't know. You have to tell me. You have learned the definition, no? Is it a financial asset? Why? Okay, which type of convertible? Optionally convertible or compulsory convertible? What you will assume? Okay, let us see both the scenario. No? If it is optionally convertible, Huh? If it is optionally convertible. What do you mean by optionally convertible? If you want, you convert, else get paid cash. So if it's optionally convertible, is it my financial asset? Yeah, it is at my option, right? I can ask for cash. I have got a contractual right to receive the cash. If it's compulsorily convertible, equity, no, Baba. It's also asset, no. Because if it's compulsorily convertible, then the preference share will get converted into equity shares. Is equity share your financial asset? Second definition is that only, no. So it is in any way, it is a financial asset for you. But did they ask you that whether classification and explanation? No, they explain the accounting treatment. So, right, we will write something more also. Solution. Convertible preference shares are financial asset to be measured at fair value. And what is the fair value today? Is 40,000 fair value? No. Out of 40, 25 you are paying right now. But 15 you are paying after 2 years, no? Find the present value of that 15,000 right now. That itself is the fair value. So fair value will be 25,000 plus present value of rupees 15,000 at 6% discount factor is equal to 25. See, this is the explanation. Will somebody able to understand your accounting treatment? You can write more depending upon the marks. In RTP, they don't tell you the marks. Otherwise, you should tell why you are treating it as a financial asset. Is it at market terms or off market terms? Plus, how do you calculate 15,000 divided by 1.06 to the power 2? Is equal to 25,000 plus 13,350. 38,350. Clear? What you will do with the difference? What is the difference? 1,650 the difference, no? Right? Okay, so this is the first thing. What is the difference? The difference is equal to rupees 40,000 minus 38,350. What it is? 1,650. How you are going to treat this? On what basis? What you will do? What it must be? Okay, here so we cannot tell because comparable loan, all those things they have not told you. Okay, so you can write that the difference will be recognized as interest cost spread over 2 years, or alternatively so 40,000 is the transaction price. Yeah, that's what. But what they have said that this will be spread over 2 years. If it's an L1, you should have written it off. Okay, alternatively we can remove. Yeah, just we can write it over what they have told. This is what they have said. Since the transaction took place at arm's length, this is considered to be the fair value for initial recognition in the absence of evidence contrary. The difference between the transaction price of 40,000 and the fair value, see, they themselves give one contradictory answer here. Followed, no? They on the one line say the transaction price itself is the fair value. At the bottom they write the transaction price and fair value, there is a difference. So I will ignore this. Followed? And they said that this will be recognized as an interest expense over a period of 2 years. Alternatively, we can treat it like a something like, okay, what is the accounting entry? Let us try to figure out the accounting entry. No? What accounting entry I would have passed? Preference, because accounting entry should give us more clarity. What is preference shares? How much? 38,350, because it should be recorded at a fair value. Okay. To what? Bank, how much? I'm paying only 25,000. Okay, so now see, this will be my journal entry. Not required, they didn't ask you. Preference shares you are going to recognize. This is your financial asset. Okay, 38,350. Now bank 25,000 you paid. See, today only you got shares, for which 15,000 is yet to be paid when 2 years down the line. So that's why you recognize that 2 years down the line what you need to pay, its present value as a financial liability, because you have got a contractual obligation to pay the cash. Understood? Now that's it. This is the entry. See the catch here. That's what entries will give you understanding. Now they said, look, this 1,650 will be expensed over 2 years. What is the meaning of this? Amortization schedule, because for financial liability also you have to prepare an amortization schedule. So I will prepare one amortization schedule like this. Year 1, 2 year. What is my opening balance? 16,000. 13. How? Baba, I have to prepare. You understood? For this time, why should I prepare amortization schedule? Have they told me the future cash flows coming, interest rates and all? No. So I'm not going to prepare amortization for financial asset there. Understood? Why? If I go back, have they told me this investment of preference shares and all, when it is going to give me, how much interest it is going to give? Then why you are bothered about the amortization schedule? And it is convertible also. It will fail the CCFC test. Amortization schedule you cannot prepare. Understood, no? Convertible means what it is going to give you is other than interest and principal. It will give you shares. What is the value of the shares? God knows. So CCFC test, it has failed. So you might classify it at FETPL. Followed? Now you have to prepare amortization schedule only for this item. So I'll go here, 13,350. What is my interest at the rate of 6% on 13,350? 801. So what is my closing balance? 14,151. On 14,151, what is my interest? 6%. 849. So when I add 14,151 plus 849, how much I will get? 15,000. Follow? And at the end of the year, I will debit Z account, credit bank 15,000. Now add the interest for 2 years, 801 plus 849, you get 1,650. This is what they have told here. The difference between the transaction price of 40 and the fair value of 1,650. Confusion. Will be expensed as an interest expense. Which interest expense? Arre Baba, it is your investment. Where is the element of interest expense here? You have to receive the interest, no? On preference shares, you have to get the interest. But what they are telling, because that 15,000 you didn't pay, no? Right now, the 2 year 6% is your interest expense. Perfect? Sorry? Why it should be having that? If it's an FETPL, why? Where is the question of amortization for preference shares? Have you find out the present value of this 38,350 by discounting all the future cash flows? There is no future cash flows, no, because what you are going to get is equity shares. How can you discount a convertible preference shares? Beautiful question. Interest expense I am recognizing on the financial liability component here. Since I didn't pay somebody full amount of what asset I purchased, at the same time okay, every time you used to pay bank. What if you don't pay them? It's the financial liability. No. Then there are two amortization schedule. One amortization schedule for asset, another amortization schedule for liability. Okay, this type of questions are not there for you. Don't get into it right now. But you understand the concept of what they are trying to tell here. Are you clear? And only general entities can give us this clarity. Otherwise, it's very difficult to grasp what they are trying to tell. Clear, no? Convinced, no? Very low probability, because the question, see, my one more observation is, if the question is confusing in the study material, high probably they will clarify and give the same question in the exam. Something missing part, I'll prove it, not I'll tell it, I'll prove it as we proceed further. But if the question is simple and straightforward, which you feel very happy to solve, enjoy it, don't expect the same question in the exam. You will get it with a twist. That Jama by amortization schedule, no, very simple amortization schedule. You are very happy to do it from your childhood. Suddenly you see from liability ledger account. Why? The simple thing, they twist and ask. A complicated things like this, either they will give you more clarity in the examination, and they will ask you as it is. Question is, have you understood this? What they mean to say interest expense? Somebody should wonder, no, where interest expense came? Interest expense came because I didn't pay someone today right now. It is not a compound instrument, because compound instrument has got two elements called equity and financial liability. We will discuss that now. Where is equity here? And it is for the issuer. It is for the issue from issuer's perspective. You have to see that it may be a compound instrument. But for financial asset, there is no element of compound instrument. You don't break up, because the definition of financial instrument is what? Financial instrument means financial asset for one party, financial liability bar equity for another party. So when you talk about a compound instrument, you will talk about compound instrument only from one party's perspective. For him, it may be a compound instrument. For you, it can be never a compound instrument. For you, it is a financial asset only. But he may give you with a convertible option, and two components may be there. So we will do a split accounting, not from this person's perspective. We will do split accounting from the issuer's perspective, Z Limited, not from X Limited. Perfect? Very clear? Yes, Vindhya? Yes. Interest expense to Z, interest expense to Z, Z due to bank. Perfect. So we'll proceed with this. We are done. See, there's one odd question, and I am telling you, at this point of time, you give a low priority to this, whatever that RTP question, no? Because this is the old syllabus RTP question. So you can give P2. Give first priority to your study material, test your knowledge questions, illustration questions. This examination questions and all, no? All you give priority to. Test your knowledge, any point of time, you should be able to solve it. You should be knowing variations, what they may ask you in the examination. Okay, so we will move to the next thing called the regular way purchase and sale. We will discuss the theory again. I told you previously that somebody enters on 1st of April. Somebody buys, somebody sells. Now, the settlement is 3T plus 2. That means on the third day, he will get in demat account the share certificate. And on the third day, he get the cash. Immediately at the end of the day, he will not get the cash. So the question comes, when they should pass the entries for recognition. They said when you are becoming party to the contract. If I go by the definition, I became a party to the contract on this date. So both have to pass the entries on 1st April. But for this type of transaction, for the sake of convenience, because it's just a matter of 2 days, no. That's why there is one option given to them. It's called a purchase or sale accounting. It's like purchase and sale of a financial transaction, regular way. It says that entity shall recognize the financial asset only when the entity becomes party to the contract. This is the original definition. But you have got an election, you have got an option to account it on the trade day or settlement day. It's not that you have to account it on the trade commitment date only. I'll give you one more option on the settlement date, because just a matter of 2 days. Now, what is that? What do you mean by regular sales? Then you will say, sir, everything is a regular only. Then see, the moment election is given, no, people will try to take the advantage of it. Correct? Anywhere you see in the society also, the moment one option, some benefit is there, some bhagya is there, or I am also eligible for it, I will try to see to it that I will become party to it. That's why they give certain rules. What do you mean by a purchase? When you can take this exemption? They said that, look, it should be a purchase or sale of only a financial asset. Under a contract, terms require delivery, not net settlement. Net settlement means what? I will, on the third day, I will say, don't pay me the difference. Followed, no? But my intention is to take the delivery and pay the cash to you, not to do a hedge or not to do a trading speculation there. Understood? No? Today I will enter into transaction. On third day, I will say, I don't want delivery. Give me, see, if you give me delivery, I will sell and I will pay you the cash. Rather than you do the net settlement. No, it's like a term, like a derivative, within the time frame fixed by the regulator. So how the trade date accounting is often? So if you do it on the trade day, you debit the financial asset. Did you pay the money? No, you credit the payables, which is financial liability. Seller will credit the asset and debit the financial asset because he has got a right to receive money from the customer. Recognize the gain or loss on the sale, because he will have a, because what asset goes at a book value, the asset will come at a fair value. He will recognize the liability, financial asset at a fair value. What goes out is the book value. The difference is his P&L. Understood? What if it is a settlement? In settlement, you just recognize the asset to bank, you make the payment. What you will do? You will, two asset will go at a book value, bank will come to you at a fair value, and the gain or loss on the sales. Take out question number 13. On 1st of January, only one question is there. Till now in old syllabus, it has never come in your examination. On 1st of January, X enters into a contract to purchase a financial asset for 10 lakhs. Now, which financial asset it is? This is a debt, equity, derivative. Question is silent. Doesn't matter also. Which is that it's fair value only. That means on first, when I entered into to buy a financial assets, its fair value was 10 lakhs. So, debit financial asset is 10 lakhs. On 4th of January, and this is applicable only for the financial asset buyer, not for a financial liability. Financial liability, it will go with my standard only. This election or option is available only for a buyer who is recognizing financial asset. On 4th of January, the settlement date, that means there are 4, it is T plus 4. One minute, sir. T plus 3, the fair value of the asset is 10.5. Oh, what happened? No, in 4 days time, my fair value of the asset increased. Imagine if this asset was purchased on 28th of March, payment is going to happen on 1st of April. Now one big problem comes on 31st of March. Should I treat it as my asset and show in the balance sheet, or should I not tell it is my asset only? Understood the catch? Because the 1st January, 4th January doesn't make any difference. But 28th of March and 1st of April, it makes a difference now. And 28th of March, if you account, its fair value is 10.5 lakhs. The amount to be recorded for the financial asset depends upon how it is classified, whether trade date or settlement date. Now pass the journal entry for both the type of scenarios. Now, on the initial recognition, it doesn't make any difference for me which method of accounting I'm going to, like what is my classification. Okay, exam any one classification they may ask you. They say that, okay, it is assumed that pass the necessary entry assuming financial asset is at amortized cost. They may say, We will do all amortized cost, FVTPL, FVOC. Okay, right. Trade date accounting. So you need to have 6, 7 columns. Okay. You can write here amortized cost, FVTPL, FVOC. Okay. When is my trade date? 1st of January 2011. What accounting entry I am going to pass? If I follow trade date accounting. Financial asset account debit to financial liability. Financial liability, no, because I've got a contractual right obligation to pay cash now. At what value you will debit the financial asset? 10 lakhs. At what value credit financial liability? 10. On day of the transaction, your even financial liability also should be recognized at the fair value. If it is FVTPL, if you subsequently classify this asset at FVTPL, what accounting entry you pass on day 1? 10-10. FVOCI 10-10. See, understand students, on the day of passing entry, I know what is my classification, but that's not going to affect my initial entry. But why classification is required? For subsequent measurement. So initial measurement, I don't need that classification at all. I need that classification, these 3 classification only for what should I do next. Perfect. Now comes the settlement date, 4/1/2011. What entry I'll pass? Okay, I can remove this. I can remove, no, because it is a big entry. I'll just remove this, okay? First entry is already there. So on 4th of 11/2011, financial liability account debit. How much? 10 only, because you created a liability for 10. How much you will pay? Just because, see, once you purchase, after you purchase, if the share prices have increased, who benefit is for whom? For you or for him? For you, no. Then what, should you pay him? Because on the date of trade, signing contract, you got it 10. None, finish. You have to pay him 10. In T+2 transaction, will you pay the money which you agreed on day 1 or on the date of settlement? Agreed date, no. So financial liability is 10. To bank, right at the bottom, okay? How much? 10. Right at the bottom. 10, 10, 10, 10. So financial liability to bank, because in all the 3 instances, you will always debit financial liability and you debit the bank. Done. On the date of settlement, the fair value has increased from how much? 10 to 10.5. Are you going to pass any accounting entry? Yeah. Should you? Okay. For if it's classified as amortized cost, are you concerned with the fair value? No. You say, sir, I'm holding it to collection. Why I'm interested about the fair value? So I will ignore that 0.5. If you classify it FVTPL, will you pass an accounting entry? What entry you will pass? Financial asset account debit. How much? 0.5 to what? P&L or fair value gain. 0.5. Perfect. If it is FVOCI, again 0.5, but to P&L, sorry, OCI, 0.5. So this is the accounting entry you would have passed, and you see the differences, how my trade date accounting versus settlement date accounting is going to happen. That means if you would have applied a trade date accounting, you would have taken financial asset to payable, financial asset to payable. It doesn't make any difference. But if it's and on the date of settlement, first you will debit financial liability, credit the bank in all the three instances. Since the fair value has increased in these next 4 days, in amortized cost, you don't recognize any fair value changes. But in OCI and FVTPL, you will debit that financial asset and credit to either P&L or OCI. Perfect? Yes. Now we will, if what if we have done in the FV second settlement date accounting. We have done trade date accounting. Then on first, am I going to pass any accounting entry? No. Side no entry on 1st of January 2011, because on trade date there is no entry, because we are following settlement date accounting. On 4th of January 2011, tell me students what accounting entry I'll pass if I have got amortized cost classification. Financial asset, how much amortized cost? 10, because once you don't recognize any fair value changes. On the date of entry, what was your fair value? 10. So afterwards, whatever changes happening, you are not interested. To bank, how much? 10 only. So here all the places you pay 10, 10. But when if it is FVTPL, what is my financial asset? 10.5. If you want to use a 10, again financial asset 5. Instead of passing two entries, financial asset 10, financial asset 5. You say financial asset 10.5, no? FVOCI also 10.5. But here 2 fair value gain P&L 0.5, 2 OCI 0.5. In this case, the only difference is you don't find the financial payable, financial liability you are not going to find. Yes, students, again, you can give a low priority here because in the past 11 attempts this question never came. And this is only one question, one concept. Now we will go to another very important. This question has appeared for your examination, little bit confusing also, but fine, manageable, called early settlement. What if the employee, you have given loan to employee, you are given for 5 years. Suddenly he says, sir, please take this loan back. I don't want. How to account this? We have learned how to account it and do an amortization schedule and account it for full 5 years. What if he gives money back before the schedule? Okay, that we will learn here. Is it a? No, it's not for trading purposes. Okay, so understood your point. Need not be, no. See, I will buy some asset, like I want to buy MRPL shares. From where I will buy? I will buy from NSE only. Does it mean I have purchased through NSE means it is trading purpose? No, I want to hold it. I will keep it at amortized cost. I will invest in some debenture through some stock exchange. I will keep it holding only. So that is not meant for this like trading purpose. It's an option given to you. Accounting purpose. Like generally all the financial, see, this option is not for financial liability. Because all financial assets and financial liability by default, the initial entry you should pass the day you sign it. Because that day you get the rights. Only for this type of certain financial assets, where the settlement is happening going to within next 2 days or 7 days, that they have given you one option. If you want, he says, no sir, I don't want that. You go to your trade date accounting. No, trade date accounting means it's the same thing what we are doing till now. Yes. So in the early settlement, I told you something will be prepaid. Now Wheel and Co has a policy, and please mark this question important. It must be there already. Wheel and Co has Limited has a policy of providing subsidized loan to its employees for the purpose of buying building houses. Story loan they are giving. X is the executive assistant of the CEO, took a loan from the company. How much? 10 lakh. interest 4%, 7%, remember slab. Date is 1st January, tenure is 5 years. Prepayment, this is one catch here. Full or partial payment can happen at the option of the employee. If he wants, he can pay. Okay. The principal should be recovered in 5 equal installments, 2 lakh each, and first will be applied to the 7%. The accrued interest shall be paid on annual basis. That means you have to pay at the end of every year. Now, the Mr. X must remain in service till the end of the loan. That means if any differences are there, we can capitalize it as a prepaid employee cost or discount on employee loan, and we will charge it over a period of next 5 years. Different, it's an off market only. Now the market rate of the comparable loan is 12% per annum. That means I am going to discount this at 12%. And which type of bond it is now? Which type of debt? It's an off market, but which type of debt? Unconventional. Why? Because there is a repayment. By looking at it, can you tell me the contractual cash flows? You cannot do it. The first step should be to calculate the contractual cash flow in this case, because by looking at it, you cannot make out what is contractual cash flow. Oh, they only give everything, what you need. They, in the following table, contractually expected cash flows are also given. In exam, they may not give, be careful. They will make your life easy here. There they may make it difficult. Now, on 1st of January, you give a loan. Principal will be repaid in 5 equal installments. Interest, they only gave you all the 4% slab and 7%. And this is your outstanding. So, this is your contractual cash flow. If they would not have given you this table, this is what you would have worked, step working note 1, irrespective of what they are going to tell. Because 1 mark, so definitely you are going to score for this. Without this, you can't proceed further at all. Now, what happened? Mr. X prepays 2 lakh on 31st December 2002 here. Reducing the outstanding principal, see how much he had? He had 8 lakhs. So, he was supposed to pay 2 lakh. He pay 2 plus 2. 4 lakh he pays. And because of this, instead of 6 lakh, outstanding becomes only 4 lakh. So, literally last year will go off. That means this schedule is going to rechange now. But since he repaid, your interest also going to get reshuffled. Otherwise, there would not have any headache of the interest. Only last year interest would have removed it. But here have given a slab there. Your interest also will get reshuffled. See, this is called compassion of IC 8 hours. They give the reschedule also. That means you need not work out that also. You should say, chalo, I'll give you everything in spoon. Just put in a mouth, make and put. The following table shows the actual cash flows of the loan considering 1 lakh. See, this is that. 4 lakh 28,000. So last year gone. What they said? Record the journal entries in the books of wheel. For wheel, what it is? A financial asset, considering the requirements of Ind AS 109. Now, in examination, what they may ask you? 1 minute. Okay, you are required to pass the journal entries. Simple. So, how do you pass the journal entries? But they said considering the requirement. What do you mean by this? Is there any catch considering the requirement? Should I write something in theory? Record the journal entries considering the requirement. Yes, the expectation may be explain the process flow, do all the working notes which is required. Followed now? Okay, so first I'll teach you how to do it. First we'll write the instrument is off market. Hence, calculate fair value at 12%. Difference is equal to discount on loan. So, we will write first, explain that look, this is an off market instrument, and I think okay, you can avoid it also, unless because question is not very clear, explain the accounting treatment, how do you, please discuss it, they are not told, but they have given in the study material this explanation. So, that you can choose. I'm not insisting that you have to write this thing, but okay, as a matter of practice, we can write. Now you should guide me, students. What did they ask me? Pass the journal entry. Tell me, what should I pass the journal entry now? Can you tell me the journal entry? Journal entry will tell me. But a measurement is very difficult for you to tell, no, by looking at the question. If you are Shakuntala Devi, you would have told me, sir, pass this journal entry with this amount. So what should I do first? Yes? Sorry? Why do I need it? That's what I have written here. With an off market, so we are going to calculate the fair value. So if I have to pass this entry, in that my first entry, I need one fair value and I am going to get the difference. So what I am going to do, that journal entry, I have explained it first. Then write one calculation of fair value. How do I calculate fair value? This is question number. One minute. Yes. Okay. How do I calculate fair value? Can you please guide me? What should I write? Sorry? No, please guide me. What should I write? Okay. Year 1, 2, 3, 4, 5. Then what is my cash flow? Two lakhs? 2 lakh? Tell me one amount, no? Will you write all the amount? Is it correct? See, one thing I can write it, you will copy me. Another thing you tell me, I will write it. You teach me. Nice, no? Students only teaching. Yeah, tell me, what should I write next? 2 lakh? A second? 44. Okay, then I understood that you have understood. Leave it. Next, what I will write? Next, what should I write? It is there, Dhanashree, but should I not present it? I know, I can, in my calculator also I can calculate the fair value, but how do I communicate to the evaluator? That's what I'm telling you, presentation carries a weightage here. Others in calculator only, in the question only everything is given. Can't I use a calculator and find out the fair value there? Got my point? Yes, at 12%, so 0.8929, 0.7972. So PVCF 2,30,357 and write the total at the bottom. Okay, fill other things later. 8,43,878. Follow? Yes. With this, can I pass the journal entry? No, I need an initial measurement, differential amount. Do I know the differential amount? So, right? Are you clear? Second, differential amount. Transaction price 10 lakhs minus fair value working note number 1 843,878. Very clear, friends. Somebody see it. That's why you should be very fast in FR, because it's a time consuming thing. You should be automatic. Your hand should be just automatic. Otherwise, what happens? No, it's not like AFM where you shortcut here, you use one without explanation, you will write the numbers there. It's not going to happen. FR is a presentation. You have to present it in a very clear, understandable manner. Otherwise, I am feeling like to write these present value factors like in the bracket, like what we do in AFM, no? Cash flow into multiplication, but I should not do it here. And if I do follow this way, it's going to take a hell lot of time for me, but no choice. Okay, so how do I treat this difference? What it is? prepaid employee cost. We call it discount on employee loan. What I'm going to do with this? This will be what is the accounting treatment I'm going to give to this? Right now it will go into the balance sheet, but going forward will be amortized over 5 years on SLM. Because 5 is the time he is there with my organization. I can get the benefits in the future because of this one-time expense for me. There's a cost, no? See, somebody reading it, they get a very clear picture of what you're trying to explain. Okay, so I have written it like this, see, in a very detailed manner. Am I done? Am I done? With this, up to this you have done certain things. With this, what you can do? You can pass only first entry, what they asked you. Till what? Till the life of the loan. Okay, you can write the journal entry. Okay, write the amortization amount is 31,224. So we'll prepare an amortization schedule now. Because to pass a year-end entries, I need an amortization schedule. And when I prepare an amortization schedule, on day 1 only I will prepare. Why? Because on day 1 only I will classify it at amortized cost. No. So the day I pass this entry, as a working note I will prepare an amortization schedule, but I don't pass any entries. From amortization schedule, entries will come at the end of the year. Write heading amortization schedule. 3 amortization schedule. Year 1, 2, 3, 4, 5. What is my opening balance? 8,43,879. How much is my interest at EIR? 12%, which is my EIR, discounting rate. It comes to 1,01,265. Is there any CCF? How much? Yes, others? What is your CCF? 2,58,000. You understood now from where it is coming. What is your closing balance? $6,87,000. Yes, 6,87,143. Okay, so write nil at the end. You can fill it later. Understood? It's the same thing now. It's an administrative thing. So first line I am going to ask you to check whether you have understood it. Rest of the part you can do it. So like same thing, like all the cash flows will go from your previous working. Interest will be at the rate of 12%. This closing balance will come here. And the last year, right here, one star, difference due to adjustment due to round off. Okay. Now, with this, am I ready to pass the journal entries? Or do I need any more working right now? No. Repayment, did I know on day 1? No, I came to know only at the end of second year. No. So, first I will write pass the journal entry, journal entries. On 1st of January 2011, employee loan account debit 843,879. Discount on loan or prepaid loan, whatever you call it, doesn't matter. 156,121, and you have already told how to treat this. You have already told what is the subsequent amortization going to happen. They love it. I'm telling you, the evaluator is going to love your paper. And see, it is very important to create an impression, students. See, not that he will give good marks. See, evaluators know by second or third page only they will understand what type of person you are. They have done so many evaluations, no? And if they say that, okay, just time pass is happening, then they are in a hurry to finish that. But if they say that there is a wait for the paper, no, then they pay attention. Followed, no? That feel comes to them. Oh, this is okay. Okay type of paper means even though I just evaluate, it doesn't, I don't think so. Because if I am imagining if I was an evaluator, what I could have done. But the moment that paper carries weight, then I will pay my attention. But when you pay attention, you should give one logical flow in your effort. This is my working, this is my step, this is what I am going to do. To bank. See, now you see, you read it. Clear, right? What we are doing with working note, everything we are doing. Now I will go to the subsequent entries now. 31st December. What entry will pass? I told you, you can pass either a combined entry or you can first pass a separate entry. What entry will pass? Let us pass a combined entry. Okay, your choice. You decide. What is the entry? Look at your amortization schedule. Bank account debit, how much? 2,58,000. Interest is income or expense? Interest income, how much? How much, Dhanashri? 1,01,265. First year interest, no? 2, employee loan. So you are going to pass this accounting entry, differential figure. Or you can say employee loan account debit to interest income, bank account debit to employee. So since employee loan remains common, I say pass one single entry. Done? Or is there any more entries? Amortization. What is my entry for amortization? Employee cost account debit, P&L, to discount on employee benefits, or discount on employee cost. 31,224. Next, what should I do? Is there any entry on 1st of January 2012, 30th of June, 31st of December? Yeah, I get one more entry now. Because till that time there is nothing. Everything is flowing smoothly. So now I'll come back to 31st December 2012. What happens first? He pays me, he prepays, right? But let us assume only one leg now. Did he default it? No. So when he has to pay me, I'll pass entry bank account debit. How much he paid me? 2,44,000. 2 lakh extra you paid, along with what we are supposed to pay. So 2,44,000 is what's supposed to pay if everything goes on smoothly as per what planned. So let us split that entry. Let us not mix that. Otherwise, I can give you one mixed entry also. You may get confused. So 2,44,000 he has to pay as per what he has originally planned. 2. What is my interest income? 82,457. Yeah, because you didn't complete that amortization schedule. 2,40,000. Actually, 4,44,000 he paid. No, we'll pass 2 entry. No, bank 2,44,000, bank 2 lakh. If you want, we can do it. Then what happened? No, it is a little complicated. Then I have to do certain calculations and explanation. 2, employee loan 1,61,543. $1,61,543. Then I will pass an amortization also. Employee cost account debit to discount on employee loan. 31,224. 31,224. But problem is, what he paid was 2 lakh rupees extra. You will tell me, sir, what entry I should pass for the 2 lakh rupees when he paid me? Bank account debit 2 lakh, no headache. That I was about to tell you. 1 lakh I will tell. Credit what? Credit what? Employee loan. When you gave him loan, what entry you pass originally? Employee loan to? When you paid him 10, you split that into 2 aspects. Called 10 lakh, 8 lakh 53 fair value, and discount is some 1 lakh 53, whatever it is. But when he paid 2 lakh, how can you entire 2 lakh you can credit to the loan? Should you not give one portion to the discount? When you gave 10, you split that. When he repays 2, it was prior to the schedule, right? Should you not split it back? Again, to some portion of discount also should come down, no? Everything is going to change now. You understood, no? Okay, we will do it. We'll do as and when we proceed, I'll explain to you. See now, this is the entry you have passed. Now you write one note. On 31st December, there is prepayment of rupees 2 lakh, which he was supposed to pay at the end, 31st December. This 2 lakh bifurcated between loan and discount. Because when you gave the loan, you gave one bifurcation, no? Oh, I gave 10 lakh, out of 10 lakh, 8 lakh 50 is my fair value of the loan, 1 lakh 50 is the discount. So when he repays, similar bifurcation has to happen, because discount also should come down now. Because on day 1 only, you would have given 8 lakh rupees loan. How much you would have allocated to discount, more or less? Less, no. If I go back to the original entry, on day 1, instead of 10 lakh, you would have get 8 lakh. This amount would have been not 1 lakh 56, no, it would have been less than 1 lakh 56. So when he has repaid 2 lakh, the 2 lakh has to be distributed to both the parties, no, Baba. How can you give only to fair value? It is injustice. Understood the logic here? Prithvi, not clear? That is normal if everything was fine. That's what we are doing. Now 2 lakh extra he paid, which was he was supposed to pay in the future. No. In that first, if you want to do that, but first you bifurcate between the loan and the prepaid cost. Because out of 2 lakhs, something is fair value, no? Something is of other than the fair value. So, right? You have to. It's going to reduce. Then again you are going to amortize it now. Only the balance you will amortize it for next 2 years. Understood? That's what it is. If you grasp it, fantastic. Okay, done. This note is complete. So, right now, revised book value of loan. What should be the revised book value of the loan? Equal to present value of future cash flow. At any point of time, your revised book value should be present value of the future cash flow. Since he has repaid 2 lakh, your reshuffling happened at original EIR, 12%. The difference to be allocated to discount. Because discount you cannot calculate. Discount is always a balancing figure. In your initial recognition also, discount was a balancing figure. So when they pay 2 lakh, in that 2 lakh, first you decide how much I should give to my loan. Balance is the balancing figure, discount. Not proportionate between. Any time, my loan should be at a fair value. My asset should be at a whatever. I showed you, one amortization schedule. Like 8 lakh 43 is nothing but the present value of the future cash flows. 6 lakh 87 present value of these cash flows. Now, if he is repaying 2 lakhs somewhere at the earlier, then this whatever in the future he is supposed to pay, its present value should be the book value at the end of the year. Followed, no? I'll teach you one methodology. I'll teach you a procedure. And I wish more questions you ask me, you understand it properly what we are trying to do. Because without understanding procedure, it is very difficult for you to grasp what we are doing. Okay, this part is you are clear. At any point of time, my book value will be nothing but the present value of the future cash flows. Like this. Followed, no? So my 5,25,000 is nothing but the present value of this. If I showed you that day, 1,85,000 is equal to 2,08,000 into present value factor at 12% for 1 year. Okay. So now we have to figure out the discount. Okay, allocation. Write the heading: allocation of the prepayment. Working note number 4. Allocation of prepayment. So what is my original book value of loan? Okay, sorry. How do you know? For this, I have to go to the amortization schedule. Because prepayment we have not considered. If I go back to the amortization schedule, this is my original opening balance. Did you pass the entry for interest income? Did you pass the amount for payment? This was the first year end balance of the loan, which you will find in the balance sheet. Did you pass the second year interest income? Did you pass the second year payment entry? After passing second year payment entry, before passing the entry for that 2 lakh rupees cash collected extra, what was your book value? In the amortization schedule, you will find 5,25,600, which is nothing but the present value of all these three. But out of these 2 lakhs, somebody has paid, because of which my interest is going to reshuffle now. So I will write here 5 lakh as my original book, 5,25,600 less. What is my revised or new book value? It's the present value of the future cash flows. Now tell me, after he pays 2 lakh to you right now on 31st December 2012, how many more cash flows you are going to get from him? 2 more cash flows. Can you tell me the present value of that 2 more cash flows? So what are those cash flows? Tell me how much cash flow you are going to get. 2,16,000, 2,08,000. See, if institute would not have given you that second schedule, you should have worked out that schedule now to figure out how much cash flows are going to come. In the question, they give you the second schedule, no? After you pay 2 lakh, there is an extra element of this thing. Interest, because there is a slab also. Into this 2,16,000 when you are going to get? After 1 year. So into 0.8929, present value factor at the rate of 12%. 2,08,000 when you are going to get? After 2 years, into 0.7972. This is going to give you 3,58,673. So after payment, whatever it is, my book value of the loan should have been 3,58,673. Right now, how much it is? 5,25,000. That means how much I should allocate out of this 2 lakh to the loan? 1,66,927. Sorry? 927, no? This is allocated to the loan. So out of 2 lakh, if 1,66,000 if you are allocating to the loan, the balancing amount you are going to allocate it to the staff cost. What should be my accounting entry for this 2 lakh? That's what I told you. If I clubbed this 2 lakh there, no, in that entry, then what all confusion on earth is there, no? It would have been there in your mind, no? You just bifurcate it, see how it's clear. Yes, Prithvi, are you clear? Now, what entry I should pass? Tell me. Because we didn't pass on 31st December. So I will, okay, are you clear? I will proceed further. Clear, no, so on 31st December 12, I passed only one leg of entry. Bank account debit, how much? 2 lakh. To what? Employee loan how much? 1,66,027. And if you see, this is an opposite of initial recognition entry. To discount on loan 33,073. Are you clear now? When the prepayment happens, this is what you're supposed to do. Because why you're doing this? All headache starts because the original loan is at off market term. Simply at the market terms, if they would have given, what could have been the entry now? If this loan was given at market terms, what is my original initial recognition entry? Employee loan account debit to bank, how much? 10 lakh. And when he repays 2 lakh, what is your accounting entry? Bank to employee loan, how much? 2 lakhs. Finished, no? Anybody in the world won't understand. Now, somebody will ask me, what is this you are doing? I'll say, go and ask management what they have done. I'm an accountant here. You don't ask me. If you want explanation, I'll tell you the form. Don't go with the contract. Clear? Now, what should I do next? This one entry is going to reshuffle my amortization schedule, because going forward, the interest income what I'm recognizing is going to change. So I have to write one revised new amortization schedule, because they asked me entries till end of the life. No. If they would have asked me past entries up to the repayment, I would have done, I'm done with this problem. But why on earth I will prepare amortization schedule? Why I will find the revised discount? But question says, pass the entries where? Till the life. So, how much year? 1, 2. That is only, or you can write the date also, 31st December 2013, 14. 2 more years now. What is your opening balance? Very good, 3,58,673. Are you clear, students, everyone? I am very happy when you tell me this number, because you have understood it. If you not understood, you would have asked me what is this number. You would have wondered what is this number. That flow you should get. What should I enter there? What is my interest? 42,031. 42,031. Is there any CCF? Yes, how much is the CCF? 2,16,000. So balance will be 1,85,714. 185,714. My interest will be 22,286. See, this is the beauty of amortization schedule. I write a star here. Nil. If your workings are perfect, obviously it should be, because all are interlinked only, no? You find the discount and find the past entry, then you unwind the discount. This value you got by discounting these two things, obviously it should unwind, you unwind, it should balance only. And the discount on loan is the balancing figure you took by considering 2 lakh. Now, what is my revised amortization? Okay, this is done. Next, write sixth one, revised amortization of discount. Can you tell me what is my yearly amortization? Yes, students, please pause the video and going next to 2 years, how much yearly amortization I need to do now? Initially, how much we were doing? 31,224. Now 2 more years are left, 2013, 2014. How much should I do it? Yes, students, please pause the video and calculate and tell me this amount. Okay, so what is your doubt? This previous amortization schedule is same as the previous one. Now, that number change means everything change, no? How? See, my 31st December 2013 interest is 43,041. If I take back my original amortization schedule, 31st December 2013, 63,072 was my interest. That's why you paid only 2 lakh advance payment. No, that's why it will shift 1 lakh up. Yeah, because without this, how do I? Okay, we can pass that, I told no. But it's the presentation, right? Yeah, I understood. You will tell me, sir, I will go from the original amortization schedule to take. But it's the presentation, huh? You can do it, it's the risk. 1 mark. Follow no students, you got the doubt, no? See, these two numbers, yeah students, here these two numbers are the same of my original amortization schedule. So what Dhanush is telling, why I should prepare one more amortization? I will take this number from there only. Yeah, you can take it. If time is short, take the risk. Because how much mark you think you will be allotted, if at all? I don't know whether it's allotted or not. I don't think it's more than 1 mark. If you find, sir, I will risk 1 mark, okay, no problem. Take that judgment, no. Why you are like thinking like a student there in the exam? No, 1 mark, half mark. Take risk. You will be rewarded, don't worry. Okay, so my revised employee benefit cost is, you got now, total is 156 original. 2 year I am going to amortize 62,448. One adjustment I will do 33,073, which I give a credit to it. Because I get 60,600, I will divide it by 2 years, I get 30,300, finish. What is my entry? Finished your entries also? I thought by now you have finished your entries also. Next to your entries. Okay. So next entry will be, this is actually child's job now. You say bank to interest income to employee loan, employee benefit cost to prepaid employee cost. Same now. This will come from a new amortization schedule now. And this is what you have just now calculated. Clear? Then one more entry you will pass, bank to interest income to employee loan to employee benefit cost to. With this, on 31st December 2014, the entire loan accounting got finished. You have no more accounting to be done. Students, are you very clear right from the beginning what we did, why we did? Can I proceed further? Yeah, this general entry you can leave some space also. You have any doubts in whatever we did? Okay, so then that means you are fully ready for the, can I proceed for the next examination question? Let us see in examination what they have asked. Will they twist it? I don't know, maybe. For me, if you ask me, very low likely, I really don't know. They may twist also. ICA is unpredictable. When you twist, they will not twist, they will twist it. When you think they will give straight, they will not give you. That's ICA. Lovely Limited has got a policy of providing subsidized loan to employees. Simran is a sales executive. Story. Loan 9 lakh, interest is 3 lakh and 5 lakh. Okay, slab is given 5% and 8% on the remaining amount. 1st April 2017 loan is given. Oh, only 3 years. See how they have made your life simple in the exam. In study material, with 5 year, how much you have to work out. Prepayment, you can do full of option at the employee. Simran shall remain in the service. Principal amount should be in 3 equal installment. 8% first you should recover. Accrued interest on annual basis. Market rate is 12% per annum. Oh, by now you understood, sir, it is the same study material question. Following table shows the contractual cash flows, original cash flow is given and how much she pays. This is ICA. To test you, have you understood? Previously, full 1 installment was repaid. In study material question, full 1 installment was prepaid. Then you applied, you says, I will go back to the original amortization schedule to take 2 things. But in the examination, you find one small trick there. They say partial payment has happened. This is testing of the concept, not of a procedure. If they would have given you 3 lakh, procedure and concept doesn't make it. It's the procedure. Somebody would have practiced thoroughly, they would have done it. Now following table shows the revised schedule also. Doesn't matter here for you. Okay, they have given you, that means they have not twisted. You are required to pass the entries considering the requirement of 109. Yes, students, so please pause the video. Don't try to refer the previous problem. No, try and do mistakes now. See, since what you have understood, take in that flow. Okay, then we will compare the answers. Yes, so your doubt is, in this question, she should remain in service till the term of the loan. Yes, that means that discount what you get, no, you can capitalize it. Because you are going to get benefits from her. She should stay, no. If this was given in service of past year, like whether you stay or not stay, you take this loan. What is the? Then you then what, when you give the loan, you give the two breakup. No, when she prepays and she will no more available, that full portion of the discount also you'll write off because that's no more required. No. Why you kept it in the balance sheet? Because you are going to get service in the future. If she herself is not there, she retires, resigns and go, then you write off that balance. Yeah, please students, understood her question, no? I see, don't simply solve it. Think now, whatever. My point is think. Just simply don't solve the problem. Think possibilities. Okay, what if it's going to happen? What is it like this? Yes, students. So now we will compare the answers. One more question also you have to work out. But you see the beautiful part is that 1 lakh rupees prepayment, part repayment. That is one small twist. Otherwise, they have given this question as it is. So first thing, I should start with, okay, this theory somebody would have written, somebody would not have written. I don't know how much value to give this. You say that this is an off-market instrument, different needs to be capitalized. Otherwise, just leave some space. Do you start doing calculation? Because it's a 14 mark. You see how much time you are spending in the classroom only. In the examination, it should be like a machine gun there, without making mistakes. Very important. So first thing, I am going to calculate the fair value. My fair value, okay, will come to 8,18,622. If somebody would have taken 4 decimals, because the question is very silent about the present value factor. Now, generally, 90% of the cases, they will give you the present value factors. If they don't give, you can take 3 or 4. Generally, we can take with FR 4. So, did you get 8,18,622, 3,63,000? Because these values they have already given. How much marks do you think will be allocated for this? 1 mark, not more than that. Then I will proceed further to initial recognition amount. You have got a transaction price of 9 lakh minus 8,18,622, 81,378. Now, what you are going to do with this? You are going to treat it as a discount and amortize over a period of the term of the loan, which is 27,126. I would have allocated 2 marks for this to get this 81,378 and 21,126. Have you got this, Vishnu Priya? Why we are not calculating? We have taken the actual cash flows only, here. These are all my. And on the day of the day when I gave the loan, did I knew that he is going to prepay? And when I am doing this? Initially. Why? Because first year I have to pass the entries. No. On this day I didn't knew. So I say, as per, if everything goes well, this is what I would have done. Now suddenly at the end of second year he comes and says, sir, I want to pay. Then it will get reshuffled. If not, my life would have been simple. It would have gone for as is normal. Followed, no? Next, I'll pass the journal entry, employee loan prepaid cost to bank. Maybe half mark, I don't know. 8,18,622, 81 and 9 lakh. Next, to pass the year end entry, what I need? Amortization schedule, which is nothing but a balance of ledger only. I'll start with the opening balance of the fair value of the loan. Take interest at the rate of 12%. The contractual cash flows are already there. So I'll prepare an amortization schedule. I need this interest. Differential interest is round off. You got this amortization 98, 66, 33. Yes, now I will start with my year end entries because they said record the entries. So year end entry first will be bank to interest income to employee loan. I'll take from the amortization schedule these 2 numbers. This is my balancing figure. Then employee benefit expense to prepaid loan 27,126. Yes, Vindhya, anything happen? Any? Perfect. Everybody is getting this. Then I will move to the second year now. In the second year also I will pass the same entry, taking these 2 numbers from the amortization schedule because at this point of time also didn't knew, or I knew it, but including one general entry like making this 4,49,000 is going to create more complication. In fact, I can club no. I can do 1 working note first, then 2 employee loan is going to also increase, 2 discount. That is one thing, 2 things I need to add. If you add 1 lakh here extra, this also you are going to increase and discount on loan also you are going to increase. So why to complicate? Study material they only did. So first I'll pass this entry, I'll keep it clean. After passing this entry, my balance of the loan has got changed and it has come as per the amortization schedule. Now you'll write, okay, there is a prepayment and what I'm supposed to do, I'm supposed to bifurcate it. Have you written this? 1 lakh. Now when you need to bifurcate 1 lakh, because this is the catch area, you might have forgot the procedure, what you need to do. When you took the loan, when you gave the loan, you split that 9 lakh into 2 portions. How? 1 leg you find out the present value of the future cash flows, the other leg was the balancing figure. So when 1 lakh is prepaid, you have to split into 2. 1 lakh is present value of the future cash flow, second leg is always the balancing figure. Journal entry when you give the loan is loan discount to bank. When the prepaid, it's the bank to loan to discount, reverse. So for this you need to find out the revised carrying amount. What would be the revised carrying amount right now, today, considering my future pending payments, and the difference will be allocated to the staff cost. Now, see, my original carrying amount is 2,81,320. Where do you find this number? In your first amortization schedule. Now, how much is pending now? It is 3 lakh, I don't know, how much is it same? 2 lakh plus 10? Yeah, this you are going to get from, see, previously full one installment itself was repaid. But since it was partly paid, okay, let me just go through. See, they have given you, no, revised schedule, 2 lakh plus 10, no headache, even partial payment. So this is the amount you are going to discount. So this should have been the balance of the loan. So 2 lakh, and this will be allocated to the discount fund. Yes, you got up to here. Yes, Vishnu, are you clear? Because this is the catch. Anyhow, by now, I don't say majority of marks, but some marks you would have got. Because up to the previous thing, even institute knows it is simple. Students will do happily. The slippery area, in every question, figure out the slippery area. This is the slippery area where people may fall down, student may fall down. And that area, ICA will generally allocate more marks, which they don't tell us. Maybe big marks, they may give 2 or 4 marks here out of 14. So you have to practice this very well. Then comes the journal entry. Then this is our procedural. Do I need any extraordinary knowledge for this entry? It is coming from the previous calculation. Amortization schedule. Do you think it's a big deal there? No. See, that means the life of this problem lies in that allocation. That is the life of the problem. Rest everything is an administrative thing. That is a conceptual thing. So I will do the amortization schedule because only 1 year is left now. And the last revised carrying amount will be 2916 unamortized amount because only 1 year, there is no divided by 2 again. And finally, I'll pass the entry bank interest income to employee loan. This I will take to from the revised amortization schedule 2916, 2916. Did you get these numbers? Worked out perfectly. So you need more practice now. Okay, then take out question number 16. And here, okay, you can take it as a homework also. Journal entry, now you know amortization schedule, journal entry and all, simple. So do one thing, get me that prepayment journal entry. Did he repay? Same story. Difference here is they have given you one present value factor table. And they have given you the schedule, original schedule. They have given you the revised schedule also. 5 lakh is prepaid. Now I just want the accounting entry for 5 lakhs. That's what I want to see here. Other things you can leave some space, journal entry and all. No, at this is too much procedural, right? Amortization schedule and all, you know it. So you right now you do how much is required to pass the entry for that 5 lakh. Follow, no? Yes, students, you can pause the video since you have got time there. You do end to end and then we'll compare the answers. Yes, you can pause the video. Read the question yourself first. I don't want to read also. Yes, students. So we'll compare the answer. And before I proceed, now I would like to tell this Bruce Lee made one quotation. There is one quotation of Bruce Lee. He quotes that he is not afraid of a person who has practiced 10,000 kicks, different types of kicks. But he is afraid of a person who has practiced one kick 10,000 times. There's only one question in the study material, but you see the variations how they have asked. Like this, I will show you so many questions. So what you need to do, what should be your strategy? Practice that thoroughly. Don't look for too many questions. That question in and out. Why? What you can expect in the exam? If you see this question, if you see the previous question, they made one twist, partial repayment. But didn't make any difference because both the places they had given you schedule. Now, I will ask you one question. What if I would not have given you this schedule? Students will feel blank there. Why? Somebody who have practiced thoroughly the questions which was there, where schedule was already available. Simple. If I am an examiner, I will not give you the second schedule and say pass the repayment entry. Then one more working mode will come, this particular working mode. And you should be knowing that. So when you practice so many times, think possibilities. Like what if half is paid? What if they don't give me this? What if they don't give me this? That's what you need to be doing. Followed, no? And make your thinkings clean. This is very important, friends. And for this, no, you have to have one relationship with the subject. I always like to suggest, okay, even online students, please don't run with 200 kilometers per hour. My video lectures. If the content browser provided still more speed, no, you would have run 200 kilometers per second. But what I'm trying to tell, stay, no, because the more you stay, listen to the subjects, you get connected with it. If you run fast, you don't understand it because you are not giving any time to the subject. What you need to do is you have to give time to the subject. You figure out what they are trying to tell you. You have a feeling, develop a feeling towards it, and you see the miracles are going to happen. Okay, so let us compare the answers. First is my amortization fair value calculation. Fair value calculation is very simple. Cash flows they have already given you. These three cash flows you take and find out the present value 21,09,716. I am expecting a perfect answer here. No different answers. Present value factors they have given you already. I hope you have taken same 4 decimals. Then there is the benefit of 3,90,000 will be spread distributed. Okay, then you will pass the amortization schedule you are going to prepare starting with 21 lakhs. So there is a difference of interest 55,000 approximation, closing balance is going to end. Did you get 55,684? Then you are going to start with the journal entry. This is the first entry as usual. Then you will pass the first year entry, distribution of the employee cost. These figures you take from the amortization schedule. This is that distribution for the life of 3 years or 5 years. I'll proceed further. Next, you say that okay, there is a prepayment of 5 lakhs, so we have to distribute into 2. So for the distribution, I need a present value of the future pending cash flows, which they have already given the schedule. So from that schedule, I will take out the cash flows. Okay, so first I will pass the entries for the first part for whatever normal I was supposed to receive. 6,10,000. This value I will take from the schedule, and then I am going to find out new carrying value. So what is my current value 13 lakh. What is my new carrying value? These are change in the format. Okay, I have done current value minus new value, which is nothing but the present value. These are all 2 cash flows into present value factors. So 8,96,000 will be bottom, my format. ICA, one format you see one way, another format you see another way. The difference will be adjusted to the prepaid cost. So you must have got 4,16,318. And then you distribute it, you pass the entry bank, and I am interested in this journal entry because this journal entry is the life. Then you prepare the revised amortization schedule because 2 more years are left. Amortization of 82,000 you are going to make an adjustment. 1,51,000 is the balance. Yes. Okay. I don't know whether they have asked you the journal entry. What did they ask you? Record the journal entry. See the question twist, no? No, you could have done. How? Okay, I also missed to see the question actually. I should have told, please do it. Because I wanted to give you. You have done amortization. After this amortization schedule is prepared, this journal entry. But you pass, no, there is no question, no mark will be allotted to you because specifically they said up to 31st December 2020. That's it. After this, you are not going to get any. No, even this is not an amortization schedule. This is the amortization of the employee benefit cost that every year you do. No, in fact, I don't know. Even though you are not done, also not required. Why it is required? Why I should do it? After this journal entry, you do anything else, it is out of your free. When some clients come, no, you give some extra work. It is out of goodwill, out of your own thing. But clients will not pay you anything. Follow, no? Okay. Table, I don't think so because question is asking journal entry, no. If subsequently they would have asked, I would have needed it. So they have given to confuse you, leave it. Yes, with this, we are done with the financial asset part and I hope you are very clear about it. The only thing is you have to practice more.